Hi, this is Eric Dunavant with Dunavant Wealth Group, the Dunavant Wealth Recap for the first quarter of 2013. 2012 is behind us, and it was really quite turbulent. Investors had to deal with the uncertainty of elections, the global slowdown, and the fiscal cliff. But despite those serious headwinds, the U.S. market managed to gain nearly 13.5% for the year. You know, the fiscal cliff was on everyone's minds to the end of December, and fortunately, they were able to reach an agreement at the beginning of January. They were able to extend some of the provisions of the Bush tax cut. They patched up the AMT. However, the debt ceiling debate was postponed. And what does that mean? It means we'll be dealing with Fiscal Cliff Part 2 sometime this spring. On the economic front, economic growth was slow in 2012. First quarter, economy sprinted out of the gates. But then in the spring and summer, what we found out is the economy was growing. It just was growing really slowly. But then to everyone's surprise, the economy picked up during the third quarter. It posted growth of 3.1%. The biggest driver this year, the housing sector. Americans took advantage of interest rates that are low and started buying houses again, and that helped. As we look ahead into 2013, I think that there could be some challenges ahead of us. More than likely, we'll get austerity measures out of the fiscal cliff deal, and that could cause some further slowing. We've seen that happen in Europe and wouldn't be surprised to see it happen here. We could also see some considerable obstacles to GDP growth. The global economy continues to slow and deal with their massive debts, and that could roll over into what's happening in the States. But as always, I like to point out that with challenges, there are always opportunities. This quarter's news or noise, I want to talk a little bit about energy, and it looks like it's a headwind turning into a tailwind. You might remember from 2003 to 2008, oil went from $26 a barrel to $140 a barrel. All we could talk about were gas prices, and that led to trade imbalances within our country. Inflation adjusted, current oil is still almost $50 more a barrel than it was in 2003, but change is coming. In the last 4 years, the U.S. has gone from the world's largest importer of natural gas to essentially self-sufficient. For the first time in 60 years, we're net exporters of refined products, and the IEA projects we'll be the world's largest oil producer by 2020. U.S. gas is expected to continue to be 50 to 70% cheaper than it is in Europe and Japan. You know what that translates into? Is lower costs for driving, but also for the transportation that supports our economy and our country. It really is possible that we're on the cusp of reversing our balance of payments problems in the next 10 to 15 years. Stay tuned. This quarter's true wealth tip: how do you estimate your retirement income needs? Well, using your current spending is a good starting point, but there's often a temptation to say that you're going to need about 80 to 90%. More than likely, you're going to need 100% of what you're spending today, because you do have to consider costs that are covered by your employer that maybe you're not paying right now, especially medical, dental, or vision. You're also going to want to factor in inflation. It's averaged 2.4% for the last 20 years. A good proxy that you can kind of see that is a postage stamp. Postage has gone up just about the same way that inflation has. Think about how long you'll be retired. You know, odds say that one spouse in a couple is going to live to at least 90. Are you ready for that? Don't sell your retirement short. And understand what your sources of income are going to be. Is it coming from a pension, Social Security? How much do you have saved for retirement? There is a real possibility you might need or want to work part-time in retirement, and you want to be prepared for that. As always, we appreciate your prayer request. We always love to pray for our clients every day. Securities are offered through LPL Financial, member FINRA, SIPC. Investment advice is offered through Dunavant Wealth Group, a division of Cardia Planning, LLC, a registered investment advisor and a separate entity from LPL Financial. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Thank you so much for joining us. We'll see you in the second quarter of 2013. Be blessed.